It's one of the most shocking stories to come from Capitol Hill. Members of Congress, average age 204, have been making millions of dollars from trading stocks. Using insider information not available to us plebs, they cashed in on the 2008 financial meltdown and more recently have been reaping profits from the COVID pandemic. Indeed, some politicians like House Speaker Nancy Pelosi have become so good at picking stocks that people have made bank just from copying her trades. This video will reveal the shocking truth about congressional insider trading, so let's get stuck in. Now, first of all, it's utterly bonkers that for most of US history, members of Congress and their close associates have been able to buy and trade stocks, given they often have access to privileged information that could influence the markets. I mean, it's like the referee being able to bet on a football match, or allowing Sam Bankman-Fried to be the banker in a game of Monopoly. Utterly, utterly foolish. Politicians are meant to serve the people and act in the best interest of the electorate. Even the perception of corruption can severely undermine public trust in government. When that trust is eroded, the ensuing negative consequences can be far-reaching, straining the bonds that hold society together. If people don't trust their government, things can quickly get ugly. Now, a key date in this story is the 4th of April 2012. That's when President Obama signed into law the Stop Trading on Congressional Knowledge, or STOCK Act. The law, quote, prohibits the use of non-public information for private profit, including insider trading by members of Congress and other government employees. But let's backtrack for a moment. The STOCK Act didn't just appear out of thin air, of course. A 2011 episode of CBS's 60 Minutes blew the story wide open. The show revealed that, although it was illegal for Wall Street insiders to engage in insider trading, that is, using privileged information not available to the public to enrich themselves, the same rules didn't apply to Congress. Conveniently, these rules were crafted by lawmakers themselves. And one of the most infuriating facts revealed at that time was that politicians were, quote, getting out of the market before the rest of America knew what was going on. The episode also detailed a host of immoral, but not necessarily illegal, practices by politicians, including the aforementioned Nancy Pelosi, which resulted in them netting large profits from trades and business dealings. The furore surrounding these revelations led to the passing of the STOCK Act. However, while the legislation sounds good in theory, it's not effectively resolved the issue in practice. In fact, it doesn't ban politicians from trading. It merely requires them to disclose trades exceeding $1,000 within 45 days of the transaction. So then, how have these wily politicians responded? Well, they typically wait till the deadline to report those transactions, or they simply miss the deadline. A Business Insider article dated January of this year, and which I'll leave linked to below, names and shames offenders who recently missed their deadlines. In total, 78 members of Congress are outed from both sides of the aisle, including prominent politicians like Democrat Senator Dianne Feinstein and Republican Senator Rand Paul. Their investments range from thousands to millions of dollars, and their delays can span months. Several lawmakers have been buying up crypto assets of various levels of quality too. The Republican Madison Cawthorn, for instance, is named in the piece for delaying reporting of his purchases of the anti-President Biden shitcoin called Let's Go Brandon. You'll have to DYOR if you want to go down that rabbit hole. Anyway, at this point, you must be thinking, surely if these politicians miss this deadline, then they're in a lot of trouble, right? The public deserves transparency and lawmakers should be held to account. Well, you'd be wrong. When people write the rules that they're bound by, they tend to be, well, lenient AF. The penalty for missing the deadline is a mere $200. That's right, a laughably low number, especially when you realise these politicians are making trades worth hundreds of thousands of dollars, or, In the case of Republican Pat Fallon, $17.5 million. $200 is what some of these goons spend on wine at lunch. And to make matters worse, there are no public records confirming whether these officials ever even paid the fines. But even when politicians do report their stock purchases in a timely manner, big ethical issues remain. Often, members of Congress maintain stocks in companies directly related to their work, which can create conflicts of interest. Last year, the New York Times found that between 2019 and 2021, 97 members of Congress reported trades in companies influenced by their committees. This is, frankly, outrageous. When you're working on a committee, you're bound to have access to privileged information that can give you an edge over other investors. It's only logical. So, what happens when these politicians are confronted about these dodgy trades? Well, conveniently for them, trades tend to be carried out by their brokers or close family members. So, when they're asked about it, they can just shrug and use the time and tested Shaggy defense.
Wasn't me.
Ah, what a tune. Now, thankfully, America is still a democracy, and some cases of insider trading are just too big to ignore. The most egregious case in recent years was in January 2020, when several senators attended a closed Senate meeting and learned about the magnitude of the COVID-19 pandemic and its likely impact on the US. What did they do? Surely they dropped everything and worked tirelessly to help their constituents and their country brace for that impact. Nope. Instead, they contacted their brokers and sold a ton of stocks or bought stocks in pharmaceutical companies. When the stock market crashed on the 20th of February 2020 and ordinary people saw their wealth plummet, some politicians were laughing all the way to the bank. Republican Senators Richard Burr and Kelly Loeffler and Democrat Dianne Feinstein were particularly misbehaved. Burr, who was chair of the Senate Intelligence Committee, sold stock valued between $628,000 and $1.7 million through 33 transactions before the market crashed. Loeffler, meanwhile, along with her husband, who, as luck would have it, was chairman of the New York Stock Exchange, made 27 transactions to sell stock worth between $1.275 million and $3.1 million before the crash. Meanwhile, Diane's hubby sold millions of dollars of stock before the crash too. Who knew pillow talk could be so damn lucrative? Now look, they all might be telling the truth on this. Their spouses or stockbrokers might be exceptionally skilled or might have gotten lucky. Who knows? I mean, it's incredibly unlikely, but without proof of intent, insider trading is nearly impossible to establish. And herein lies the problem. As John Reed Stark, former head of the Office of Internet Enforcement at the Securities Exchange Commission, told CNBC, quote, "It is incredibly difficult to prove intent without some smoking gun of epic proportions, like an email that says, 'Hey, we're going to manipulate this stock this week, let's all get the gang together.'" Politicians can be shysters, but they're usually not fools. Usually. So, you're unlikely to find such paper trails. Instead, spectacularly underfunded journalists and their ilk sift through official documents looking at stock filings by politicians and their close relatives and flag anything suspicious. And then there is some furore, the odd question at a press conference that might fluster a politician, before the news cycle moves on and the topic is all but forgotten. None of the politicians I just mentioned faced any sanctions.
Sorry to interrupt you folks, but I have to let you know about the Coin Bureau deals page. Now, my team and I have been able to pull together some of the best promos and discounts in the crypto space. We're talking trading fee discounts of over 50%, thousands of dollars in bonus airdrops, amazing deals at top exchanges, reduced prices on hardware wallets, and much, much more besides. So just go to coinbureau.com/deals, also linked to below, and find the promo suited to you. Enjoy the rest of the video.
But with one politician, accusations of insider trading seem to be harder to scrub off than glitter after a 3-day bender at Glastonbury. The House Speaker, Nancy Pelosi, is synonymous with allegations of congressional insider trading. And she was, of course, among those accused of wrongdoing in the 60 Minutes documentary referenced earlier. Since the implementation of the Stock Act, people have been able to track stock purchases made by Nancy and her husband Paul, a venture capitalist. And guess what? The pair just so happen to be some of the most successful traders in history. Together, they've accrued $120 million, according to estimates made last year. Nancy might be Congress's top earner, with a congressional salary of $223,500 per year, but it's in stocks where she really cleans up. Her estimated net worth skyrocketed at the onset of the Great Recession, going from $31.4 million in 2008 to $101.1 million in 2010. A 220% increase at a time when the S&P 500 decreased by 13%. Nancy, too, made millions during the years of the COVID-19 pandemic. I guess where ordinary people see risks, others see great opportunity. Now, her trading successes have become so ridiculous that they've spawned a cottage industry of people tracking and copying her trades in a bid to beat the market. Thanks in no small part to Nancy's shenanigans, politicians are now perceived to be so good at picking stocks that investment firm Subversive Capital Advisors rolled out 2 actively managed ETFs that base their investments on the financial disclosures of Democrat and Republican lawmakers, as well as those of their families. Now, I must say it rather amused me to find out that the ticker for the ETF based on Democratic lawmakers is Nance, while that of the Republicans is Cruz for Ted Cruz. You may have a boring name, Subversive Capital Advisors, but I like your style nonetheless. Anyway, back to Nancy. Unsurprisingly, she's been challenged multiple times about whether her husband's profitable trades are in some way connected to her. Of course, she denies it. Meanwhile, until recently, she's been forcefully resisting efforts to stop lawmakers from trading stocks. In 2021, she argued the case for politicians and their families buying stocks because, quote, "We are a free market economy."
We are a free market economy. They should be able to participate in that.
A free market economy. That defense was so weak that Trevor Noah and The Daily Show picked up on it in their skit called Corruption American Style. In it, thinly veiled African dictators are learning corruption techniques from the United States. A link to the full skit is in the description below. For now, here's a teaser.
In America, if you say the word free market, you can do anything.
Okay, so far this video has been pretty scathing of politicians. But I must emphasize 2 points though. Firstly, not all politicians are involved, and secondly, there do seem to be signs of improvement. On the first point, not all politicians who invest in stocks do particularly well. In fact, a study by Dartmouth College showed that stocks bought by members of Congress reported between 2012 and 2020 did not, on average, perform any better or worse than similar stocks. The authors emphasized that this doesn't necessarily mean insider trading isn't happening, but if it is, it's perhaps not as widespread or impactful as some might fear. When you realize that politicians on average outperformed the S&P 500 by 10% on an annual risk-adjusted basis in the years before the 2012 Stock Act, it suggests that the legislation has had a far-reaching impact. That said, as this video has hopefully shown you, the potential for insider trading remains high in Congress, and more stringent measures need to be taken to eradicate the scourge. Luckily, there are some efforts in that direction. Back in July, a bipartisan bill called the Ban Stock Trading for Government Officials Act was proposed by Senators Kirsten Gillibrand and Josh Hawley. If passed, the proposed legislation would flat out ban stock trading for high-ranking government folks, including Congress members, the President, and other top execs in the executive branch, along with their families. Unlike the old law, this new bill doesn't let anyone off the hook by using blind trusts, which are trusts managed by an independent third party and which the beneficiary officially has no knowledge of or influence over. Politicians would still be able to own mutual funds and index funds, but they wouldn't be able to trade in specific stocks. Punishments for flouting the rule would include fines of at least 10% of the value of the prohibited investments. Meanwhile, employees of the executive branch would have to forfeit their stock profits and face fines of $10,000 or more, whichever is greater. Does it go far enough? Maybe not. But it's a positive development notwithstanding. And another positive development is the fact that, after months of resistance, the pressure seems finally to have gotten to Nancy. In February of last year, she signalled her backing for the ban, but argued that US Supreme Court justices should be included too. Fair enough. Unfortunately, there's no word yet on when the bill might get a committee review or a full Senate debate. In other words, for the time being, it's stalled. If it does go through, though, it will delight the public. 2 recent surveys, one by Morning Consult and Politico and another by the University of Maryland, showed that a strong majority of people favour a ban on politicians trading stocks in individual companies. So, dear senators, give the people what they want. And that concludes today's video. There's so much more to this topic, and as ever, I've included a list of useful resources in the description below in case you want to learn more about it all. Before you leave, let us know what you think though. Should elected officials be allowed to buy stocks? If so, should there be limits on what they can buy and when? And if you like this video and want to see more content like it, let us know in the comments below. And as usual, like, subscribe, and head on over to our deals page, linked below, for some of the best discounts out there, including up to $40,000 in bonus airdrops at leading crypto exchanges. If you just can't get enough of Coin Bureau, well, I don't blame you. So, for more quality content, check out our socials and sign up to our newsletter for exclusive insights about the crypto market and updates to my crypto portfolio. See you next time.